Good morning and welcome to another edition of Business Morning on Channels Television. I'm Ini John Mekwa.
And I'm Ladi Williams. Great to have you on the program this morning. Let's look at what's happening in the world of oil. Now, oil prices rose today, extending strong gains overnight with fuel demand growing and crude stocks declining as production remains hampered in the U.S. Gulf of Mexico after two hurricanes. The market was also supported by a broader switch back into risk assets as concerns eased over a potential default by a huge property developer in China's Evergrande and the possible fallout on the world's second largest economy. U.S. West Texas Intermediate crude futures rose 13 cents to $72.36 a barrel, while Brent crude futures rose 17 cents to $76.36 a barrel. Both benchmark contracts jumped 2.5% yesterday after data from the U.S. Energy Information Administration showed U.S. crude stocks fell by 3.5 million barrels to 414 million barrels in the week to September 17th. That's the lowest since October 2018.
Well, coming back here to Nigeria, the federal government has taken the campaign of natural gas as a resource for energy transition to the ongoing Gas Tech Conference, which is holding in Dubai. Speaking to participants and investors as well as exhibitors, the Group Executive Director, Gas and Power, NNPC, Mr. Abdul Kadir Ahmed, says that the rejigged NNPC management is developing a roadmap for domestication of gas in Nigeria so that the cost of energy can be reduced.
What the gas activities will do in this sense is to, first of all, ensure that there is a market for the gas domestically in the first place. And that can only be done by encouraging people to come onto it, making people understand that it is cheaper and cleaner to use gas, which the NNPC and the federal government has directed the NNPC to champion, especially by declaring year 2020-21 as decade of gas. Now, what that does is you see so many things being put into it. One of them is the autogas. The autogas program is still there. It's a project and it is being run, which will further be developed in order to take off the gas that will be produced. Aside from that, you also have power plants that are going to run on gas, and that is going to be complemented by the AKK pipeline that is going to be put in place.
And China's ambassador to Nigeria, Queen Jen-Chun, says the volume of trade between both countries rose to $20 billion last year, despite the impact of the coronavirus pandemic. Addressing a news conference in Abuja, the ambassador mentioned that China's economy is going back to normal, while both countries are planning to expand import and export trade. Let's take a listen.
Last year's volume trade is about nearly 20 billion US dollars between the two countries. This is the figure of last 20 billion US dollars. This is the figure. Last year is about 19.2 billion, then nearly 20 billion US dollars. So now we are thinking that how can we expand? Because because Chinese economy now is restoring to normal, even the COVID-19. Nigeria now, we are working hard. How can we expand import and export?
Welcome back. Well, it's about 4 months since the federal government banned the use of Twitter in Nigeria. Last week, a group of non-governmental organizations met on the prolonged ban of Twitter, calling it a disservice to the federal government itself, as well as the citizens of Nigeria. Also, the Minister of Information, Mr. Lai Mohammed, had assured that the ban will soon be lifted. The definition of soon is what a lot of Nigerians have been asking. And he also said that there's progress in the talks with Twitter. The minister did not, however, specify when the ban will be lifted. And this has continued to cause worry to a lot of Nigerians. Well, one of those who carried out a research on the cost of the ban of Twitter on Nigeria is Benga Sheson, the executive director of Paradigm Initiative, notes that the country loses about $250,000 every hour since the Twitter ban. The figure arrived at, it says, using Brooklyn's institution method. Well, we have him joining us now. He'll tell us how they arrived at this figure and where we can find this much money. Hello, Benga. Good morning.
Good morning. Thanks for having me.
Good to have you. Well, you know, the figure $250,000 every hour certainly will catch a lot of attention. How did you arrive at this, and where is this much money? That means it's been in the Nigerian economy when Twitter was active.
Well, you know, the number is, it comes from a very transparent process. The Brookings institution, there's a tool called the Cost of Shutdown tool, and it's online on netblocks.org/COST. And the way it's calculated is pretty simple. Well, not pretty simple. I'm sure that it's simple to those who calculated it, is that you look at the size of a country's GDP, then you look at the contribution of ICT to that country, then you look at the contribution of platforms to that country, then you look at the contribution of a platform, which is Twitter, which is why it's easy to then calculate what percentage is lost to the economy every time that service is not being used. And in Twitter's case, by the way, the reason why this $250,000 has not been lost every hour is thanks to, you know, people who have been using VPNs to circumvent this ban by government. If they had not, then this would have been a total, you know, loss. And this, you know, costs include those who spend money to advertise, those who receive money to also promote services online, and all of this galaxy of services. That's what comes up to that contribution to the economy. Of course, it's a loss to those businesses, and it's a loss to a country, you know, that claims it's trying to increase its own revenue, non-oil revenue.
Well, what about Twitter itself? What's the cost to Twitter?
So there is a cost to Twitter, because don't forget that platforms make money from these adverts, but you know, it also depends on the volume of platform advertising. Don't forget there are two levels of advertising. There's platform advertising, the adverts that are run on the platform. Then there's off-platform advertising and services, which is basically when, you know, influencers are asked to promote a product or service and things like that. Nigeria has had a lot more of the latter than, you know, advertising on the platform Twitter itself. So yes, Twitter has had, you know, a loss, but it's not exactly a very big hit. And you can imagine that if a business has had a major hit to its, you know, revenue base, it would definitely have compromised a bit faster than it appears to be happening now. So yes, there's a hit to the, you know, Twitter bottom line, but you know, it's not exactly that Nigeria is one of the top countries where they earn money from, clearly.
Okay, but one of the conversations that's also been birthed from this is that the Federal Inland Revenue is targeting tax from Twitter and obviously other digital platforms. So would you say this is one of the advantages of the ban?
Well, you know, I've always maintained that any country is free to ask any company to register in its own space. But this is 2021, not 1984. So you will have to demonstrate that, you know, you have the conducive environment and that there will be more gain than loss to the platforms and to the companies. So it's okay, you know, that the government is asking platforms to register. What is not okay is how it's being done. You do not announce that people should go and register legally and then go to the National Assembly, which is what Mr. Lai Mohammed did. He claimed there was a law that would force them to register. Meanwhile, the week after or 2 weeks after, he was then going to the National Assembly to talk about a bill, not just, you know, which is not law yet, which means, you know, we sort of put the cart before the horse. We don't have the legislative backing for what we're asking them to do. Well, you know, the other thing is that there's a general, you know, business registration process that already exists. But what he was referring to was that platforms that are not physically in Nigeria are sort of, you know, breaking a law, which is bullcrap, you know, if you ask me.
But look at other countries now. Do you think is Twitter and all these other social media platforms, are they being taxed in other countries?
You know, we've got like, you know, over 160 countries, and you know, where people could say, "Oh, come and register." It's literally impossible for platforms to be present in all of those countries. So there are many factors they would have to consider. They will have to consider the legal requirements. They will have to consider the ease of doing business. They will have, but I honestly don't want to speak for these businesses, but I think it's very clear that it is impossible to register in all the countries. You can see that there are certain countries that have been pulling their weight. India pulled its weight. The difference between what Nigeria did and what India did. I mean, India had some excesses very clearly, but the major difference is that India went through legal processes. India went through creating a new law. Nigeria, Mr. Mohammed just announced, and they sent letters to telecom companies to shut down the services to Twitter, which in itself is illegal according to Nigerian law. So the approach we're taking is literally putting our foot in our mouth and then throwing tantrums like a child that says, carry me, carry me. Meanwhile, there are other children that can be carried. So I think that, yes, it will be my joy for Twitter to have an office in Nigeria. Then, of course, all the students that we train at Part-Time Initiative can maybe find a job at Twitter. But Nigeria is being silly the way we're going about it. Well, not Nigeria as a country. Mr. Mohammed and his cohort who are leading this show of shame.
We've seen other countries like China, for instance, now, stop most of these social media platforms from, working in the country so that they can have their own, homegrown platforms. Shouldn't we be looking at, that avenue now?
Well, this is a, catch-22 situation. Even if Nigeria wants to say, let's have our own platform, look at what the CBN and the Ministry of Communications and Digital Economy have been doing, in Nigeria in terms of the ease of doing business for startups and tech businesses. It hasn't been the best environment. The CBN is closing accounts today, banning platforms tomorrow. So even if we were to create our own, in quotes, platforms or our own Twitter, the CBN will kill them. Mr. Pantami and Mr. Lai Mohammed, and Mr. Emefiele will kill them, unfortunately. So unfortunately, that's one thing. The other side is that it is impossible, literally, it is impossible for you to say you want to replace something that has existed with something that has not even been done. But nothing stops Nigeria from promoting and creating a conducive environment for platforms to begin to start in Nigeria. I mean, we had an example of somebody who was going to create an alternative to Twitter, even though we heard nothing again from him now. But the approach was also emotional blackmail. You don't emotionally blackmail people to use your service. This is the gig economy. If it provides a service and offers something that meets the need of people, they will use it. And I think the message to Nigeria right now is, even if we want to go the way of India, India created coup, KOO, and that's why the government was encouraging people to go to coup and follow them. I guess they've gone to cool down there. Even if we want to create our own platform, Nigeria is not providing a conducive environment. Between the CBN, the Ministry of Comtech, the Ministry of Information, and all other folks that are not encouraging the ease of doing business, including state governments that are clamping down and are creating terrible environments for business, we will not encourage the Nigerian platforms to thrive because we are killing them and killing their businesses. We need to decide as a nation, do we want to clamp down? Do we want to spend all our energy? There's a cost to tyranny. There's a cost to clamp downs. Or do we want to promote an atmosphere of innovation? And I would, put my money on Nigeria focusing on a climate of innovation over creating a climate of fear and using terrorism and some other things, instead of really tackling them, using them as excuses to limit the creativity that is clearly in Nigeria. Look at what we've done in the tech sector. Look at what we've done, with Nollywood and other sectors, in spite of government. Now imagine there was policy support for any of these things.
Well, another thing that the federal government has noted is the issue of fake news and abuse of some of these platforms. So how do you suppose that the government can balance it, with allowing creativity to thrive with the businesses and the revenue that comes with it, and also managing the issue of fake news, which, of course, can also have a lot of disastrous impact on the economy?
Yes, fake news, as it has now become known, or disinformation, misinformation, and all its cousins, they are a problem. In fact, dangerous speech or hate speech, as it has come to be known also, is also a problem. But, let me speak very quickly to three things. Number one is that the biggest criminal cannot stop a crime being committed by others. unfortunately. The Nigerian government itself has been one of the biggest purveyors of fake news and hate speech. If you want to find out, ask Mr. Propaganda, who I won't mention his name so that I don't put channels in trouble. He knows the propaganda business more than any Nigerian can try. And he's the Minister of Information and Culture. So if they really mean business with stopping this fake news and hate speech, then let them demonstrate by showing us that there is no impunity. Punish those amongst yourselves who have done this. Then we can have a conversation about fake news and hate speech. But having said that, I mean, being cheeky a bit, it is the job of all of us as citizens and even civil society and the private sector and governments to work together to change what is happening at the moment, which is the fact that there is, obviously a lot of dangerous speech online. There's gender-based violence and all of that online. And the way we can do that is not by banning from the top. Yes, there are legal provisions that can, there's a cybercrime law which is not perfect, but is clearly available to punish offenders. We've seen it being used a lot more against journalists and against opposition members. If you could also target, those who really, really commit a crime, give them a day in court and don't, in the name of solving a problem, create another problem. Apart from that, the best way for us to promote better environment, a better environment online is for the community online itself to have, community norms. And I know that people will say things like, oh, if you leave the community alone, they will never self-correct and things like that. But that's not true. That's not true. What is rewarded is definitely going to perpetuate itself. One of the reasons why platforms have provided an avenue for you to report what is dangerous or what is fake is because we're all trying to work together on this. Unfortunately, this is going to be a problem for a while. But don't forget, the reason why we have false information or dangerous information is not because of platforms. These are things that exist in community in itself. It's like somebody saying, there's too much gisting on social media. It's because we love the rumor mill. Before social media, we had our other print channels for the rumors and the stories that were not true. So it is because there is impunity. It is not being corrected. This, by the way, is one of the reasons why a few years ago when this conversation kept coming, we kept saying one of the problems with trying to tell people what not to say without demonstrating that you're committed to it yourself is that you will end up throwing, you end up behaving like someone who wants to keep committing a crime and saying others shouldn't do it. So definitely it is a problem. I don't know how many people have seen the report that was launched by Freedom Initiative recently on disinformation in Nigeria. And there's so many other society organizations that are looking at how we want to discourage this. One other way that government can reduce fake news in Nigeria is proactive disclosure of information. If you don't want people to start a rumor that the president is sick, then when the president travels, I think it's a lot better now. When he's about to travel, we get to know he's traveling to go and check his health and things like that. Before, the reason why there was a lot of rumor is because there wasn't proactive disclosure. People then began to ask questions, and there can never be vacuum in information flow. Somebody will try to fill it, and it usually comes either as fake news or hate speech and things like that. So those are some of the things that I believe that we can do. But the current approach of banning everything will not work. In fact, when you seek to control, what you will do is you will multiply the black market channels.
All right, Gbega, just very quickly now before we let you go, talking about taxing the digital economy, is there an effective way of measuring, taxable income?
Oh, yes. There's the same way you measure for most of that businesses. And in fact, when you have a new business, there's usually a moratorium because the business is new, because you are trying to encourage its growth, so you may give it a tax rebate. We've done that for cement anyway. We've done it for many other things. So we can apply the same technology because you want to promote the adoption of the use of these services. Because to be honest, I'll give a practical example. When we began to talk of the right of way, that state governments should please reduce how much it's going to cost to lay fiber cables across Nigeria, some state governments were charging an arm and a leg and bringing your grandmother's bones from the grave. The irony is that when you do that, you're preventing people from being connected because of the greed of making money from the telcos in the first place. But if you reduce the cost, now we've got Kaduna, Ekiti, and others saying, in fact, come here, 0 naira, come and connect. When you do connect, businesses will thrive, and if businesses thrive, guess who benefits? Government, through taxes. More people get jobs, income tax, more people provide services, more people increase services, cost of expenses increase and all that, and that helps with the economy also. So the right way to do it, three quick things. Number one is policy. Do not create a clamped down environment. Make sure that policy supports innovation. All this nonsense from the CBN or the Comtech, Communication and Digital Economy Ministry, or from Information and Culture Ministry, those three gentlemen need to settle down and make up their minds that Mr. Buhari and Mr.
All right.
Osinbajo, if you really want to grow the economy, then do what is right.
All right, Benga, so we'll have to leave it there now. Well, the regulators are doing all they can to also protect the Nigerian people. Thank you so much for your time on Business Morning.
Thank you so much for having me.
All right, we'll take a moment now. Commodities market update is next. Do stay with us. This is Business Morning.
Well, to our next conversation. Now, Nigeria has raised $4 billion through Eurobonds, and this has been described as an exceptional performance and one of the biggest financial trades to come out of Africa in 2021. Also, it's been called an excellent outcome. The Debt Management Office, which has a reflection, says that this is a reflection of investors' confidence in the economy. Well, let's find out what Adesola Sumoni, analyst with Financial Derivatives Company, thinks about this and, of course, other issues in the commodities market. Good to speak with you again, Adesola. Good morning.
Morning, Nini. Thank you for having me.
Great. Good to have you. So this has been described as a sign of investors' confidence in the economy since it's even being oversubscribed. What do you think of this? Is it a sign of investors' confidence?
Oh, well, there are a number of issues, but to start, we plan to issue $3 billion US dollars in Eurobonds. But
and now we have 4 billion, yeah.
So we had 4 billion and it was oversubscribed more than 4 times. I think the book value was about, the book orders was about 12.2 billion. So I would say part of it is investors' confidence, but more importantly, it was the attractive pricing. I mean, we had a 7-year tenure of 6.125% per annum. We had 12-year tenure of about 7.37% per annum and 30-year tenure of about 8.25% per annum. So I think more of it was more about the attractive pricing, and also there's a strong appetite for high-yielding emerging market bonds. So I think those factors also played a significant role, also in addition to some form of investors' confidence.
Significant amount of funds to finance, projects in the act. Will this, can we expect to see some positive impact on infrastructure?
Oh, well, yes and no. So it is positive in the sense that, yes, we have some more ammunition, we have some more funds to finance, to fix our budget deficit and to help implement the budget. But whether it will, in theory, let's say in theory, it will most likely, it could be used to finance some infrastructure projects. I mean, for the 2021 appropriation bill, the government, I think they're looking to complete some ongoing power and transportation projects. We have some rail project, the Lagos-Kano rail project, the Abuja, and I can't remember where, but some rail projects that the government are looking to complete, and some power projects as well. That's in theory. Whether it will be actually used for that is yet to be seen. I mean, if you look at the budget implementation report for 2020, we saw capital expenditure implementation of only around 59%. Meanwhile, recurrent expenditure, non-debt recurrent expenditure implementation was around 94%. And the recurrent debt servicing expenditure, debt servicing implementation was around like 97%. So that just shows kind of where, the government's priority is, at least from last year.
All right, FX supply is a big one in conversations in these days in Nigeria. Do we see this making any impacts?
Oh, obviously, yes. I mean, it's good. That's $4 billion addition to our external reserves. So that is good. It will give the central bank some form of ammunition to further, help the FX market. Also, we had the SDR, I think around $3 billion US dollars. And because of the attractive rates and the attractive pricing and the strong demand, the federal government is looking to also, it's planning to raise some more bonds from the Eurobond market. I think around $2.2 billion. So I think it's positive for the external reserves. It will provide the central bank some more ammunition to continue to inject FX into the financial markets, and it will also be it's positive for the exchange rate. It will help alleviate some of the pressures on the exchange rates.
All right, and JP Morgan's report on Nigeria's growth is pegged at less than 2%. Should we be worried here?
We need to read the tea leaves, right? I mean, the forecast, JP Morgan forecast, 1.5%, which is less than IMF's forecast for 2021, which is around like 2.5%. It's also less than central bank's forecast. It is also less than the forecast of Bloomberg, a sample of 11 Bloomberg economists. And the key reasons for that are, one, the FX issues, the FX pressures. We also have like underlying economic weaknesses in underlying macroeconomic weaknesses. We have also the rising coronavirus cases, a third wave of coronavirus cases in Nigeria. And finally, the very, very slow vaccine rollout. Only around 1% of the population has been vaccinated. And the projections significantly underperform even Nigeria's population growth, which is around like 3.6%. So I think that there are a few things that the government can do. One is to try to, at least in the short term, try to elevate the FX liquidity, because that is constraining economic activity. Try to, elevate the FX liquidity and try to increase the vaccination rates. I know that, we received around 4 million doses of I think, AstraZeneca vaccine. So if the government can try to, increase the doses, I know there's a lot of vaccine apathy also in Nigeria. People are suspicious, or, there's a lot of also conspiracy theories about the side effects of the vaccine. But if the government can have some campaign to elevate the public, I think that would also help with economic activity.
Well, is it that vaccination rate globally now, not in Nigeria, that has brought about the gains in the global oil markets?
Oh, well, yes and no. The thing with the vaccination rates is that the vaccination rates kind of like stems the tide of COVID-19. It's kind of reduces the risk or the threats of COVID-19, and that is helping. That is helping also the global markets. But as of now, the other factors are driving the global oil markets are mostly supply side factors. One is production constraints in the United States. We have production shut-ins in the Gulf of Mexico, driven by the Hurricane Ida. Around 25% of the production are still offline, and many of the oil majors in that area, they have suggested that these production shut-ins are likely to persist up until early next year. We have sharp drawdowns in U.S. crude inventories. Data from the American Petroleum Institute and the Energy Information Administration suggests bigger than expected drawdowns in U.S. crude stockpiles. And in addition to that, we also have OPEC members struggling to increase their production after OPEC shifted its production stance in July. I mean, Nigeria is struggling to increase its production. Angola is struggling to increase its oil production. Kazakhstan also, which is not an OPEC member but is part of OPEC Plus, is also struggling to increase its production. So all these supply side factors are supporting prices at this time.
All right, and the oil market is looking really bullish right now. What's your outlook for near term for prices of oil?
Okay, let me borrow an outlook from Goldman Sachs. They see oil reaching $90 per barrel at the end of this year. I think that's a little bit optimistic, and the reason they see that is because of, in addition to the factors I've mentioned, they also see the crisis we are seeing in the gas market. So because of gas prices are reaching like record highs, they suspect that we might be seeing some switch from from the gas market to the oil market. So I think that is why they're forecasting, oil to reach $90 per barrel. But I think that's a little bit bullish. That's a little bit optimistic. I think oil price will still trade between the range of maybe 75. I think $80 per barrel is fair game. $90, I think, is a little bit optimistic.
I think we're still looking forward to $100. Well, anyway, please take us through the movements in the commodity market space.
I think a commodity in the spotlight, a commodity I'd like to talk about today is palm oil. So we've seen the price of palm oil in the global markets increase sharply, and you might wonder, why is that important? Because Nigeria used to be in the 1960s, used to be a very big producer and exporter of palm oil, but then Indonesia and Malaysia came and they took over. And now Nigeria is a net importer of palm oil. And now Nigeria's palm oil production, I think, is around 1 million metric tons per annum. Meanwhile, our demand is around 3 million metric tons per annum. So with the price increase, I think if the price increase persists, if it persists, then we might see an increase in the price of many of these commodities that use palm oil as an input, from pharmaceuticals to food to pastas to noodles. All of them would increase, and it's particularly important because palm oil is on the list of 41 items that are not able to access. Now I think it's about 45 items or 44 items that are not able to access FX from the official market. And given the pressures at the parallel market, I think that will also contribute to price increases.
Thank you so much for bringing us up to date on movements in the commodities market, and enjoy the rest of your day.
Thank you.
We'll take a moment now. When we come back, we'll head to the market. To stay with us. Let's do an opening call to the markets now. Willie Bong.
Ini, it's a bright day, but the equities market seems to be dawdling, taking its time to bounce from the dip as the all-share index moved further down by 0.05% to 38,852.69 points, still struggling to make its way back to the 39,000 level. And the biggest culprit here for the pullback is still the banking index, which was down again yesterday by 0.83%. And this is due to the sustained profit taking in that sector. We also saw a dip in the volume, value, and deals at the close of trading yesterday. Performance for the key sectors was mostly positive, except for the decline in the banking and consumer goods indexes. Now, UAC Nigeria was responsible for the pullback in the consumer goods counter. The bull run continues at the unlisted OTC markets. We see that the NASD index climbed higher by 0.76% in yesterday's session, from 0.72 recorded on Tuesday to 742.97 points, and 4.89 billion naira was added to the market value. Overall turnover was also increased at the close of trading yesterday. The big eye catcher here was the jump in the total value of trades, which rose by more than 600% to 428.56 million naira. And we're seeing that from about 60 million naira that was traded on Tuesday. We begin to see a steady bounce in the NASD market, all thanks to bellwether stocks, Friesland, Campina, Wamco Nigeria, Double 11 PLC, and Central Securities Clearing System PLC. Now to the fixed income market, where at the bond market, we saw some demands across the curve, and interest was in the short, mid, and long ends of the curve dominated the trading session. And we have Caleb Alimi, is the fixed income dealer at FSDH Merchant Bank, is standing by on the phone to tell us the outcome of the bond auction that took place yesterday. Good morning, Caleb.
Good morning.
Caleb, great to have you this morning. Now, quickly give us a summary of yesterday's bond auction.
Okay. Yesterday's bond auction, the DMO had offered 50 billion each of three maturities, the 2028, 2036, and the 2050 papers. And then we saw a total sale of all of those bonds at the subscription of about 237 billion, 42 billion of the 2028, 115 billion of the 2036, and about 118 billion of the 2050. All were sold at a maximum rate of 13%. We noticed that the 2028 and 2036 papers maintained their stop rate from the last previous auction at 11.6 and 12.75 respectively, while there was a 20 basis point jump in the stop rate of the 2050s from 12.8 to 13%.
Oh, that is quite interesting because there appears to be some similarity with the NCB primary auction that took place on September 8th, where the CBN increased the stop rate for the one-year paper by 40 basis points to 7.2%. Are we seeing a pattern with long-dated instruments issued by the government?
No, it's too early to call it a pattern. This is the first time that we're seeing the DMO maintain stop rates at the mid to short end of the bond auction, and then increase the rate of the longest paper. So let's just say it was just market reality. It's too early to call it a pattern until they repeat itself maybe 2 or 3 times, like we have in the Treasury bill space, where the 91-day and the 182-day, have kind of been pegged, whereas the one-year paper has been moving. So it's too early for us to call it a pattern for bonds.
Okay, so also we move on to where the DMO had a successful run, raising $4 billion through Eurobonds. It was dubbed one of the biggest financial trades to come out of Africa in 2021. What happened there, and what does this mean for the government?
Also, that was a very fantastic story and a fantastic outing by the DMO. Interestingly, FSDH Merchant Bank played a role as financial advisors to the deal. Like you mentioned, the DMO came to the market to raise about $3 billion. But the order book peaked at around 12.2 billion, which was about 4 times oversubscribed. The DMO proceeded to raise about $4 billion of 3 different maturities, a 2028 paper, a 2033 paper, and a 2051 paper, at a maximum rate of about 8.25% on the longest end of the curve. What it means for the government is that they've been able to raise a significant portion of the deficit budget, which was earmarked for foreign borrowings. At the beginning of the year, they had said they would raise about 2.2 trillion from the offshore markets through Eurobonds, and then with this successful auction, they raised about 1.6 trillion. The rest of the balance will be raised through bilateral and multilateral arrangements. So it's a win for the government in the sense that the deficit budget has been largely plugged.
Thank you so much, Caleb, for that insight. That's Caleb Alimi, fixed income dealer at FSDH Merchant Bank. We move over quickly to the Treasury bills market, where the market closed flat as the average yield was unchanged at 5.5%. Elsewhere, we see that the almost segment, the average yield expanded. That is, it rose by about 9 basis points to 6.4%. So we begin to see a great number of inflows, especially with the Eurobonds coming into it, and then we'll probably see better liquidity in terms of the FX market. And I'm hoping that next week would have a good run as well. So, Ini, back to you.
Yeah, well, when you talk about the Eurobond, the $4 billion Eurobond success, I'm telling you, we're going to celebrate that for a while. And we're also expectant and really anticipating some really positive changes, especially in the FX supply.
Sure.
That's really important. Well, thank you so much. We'll enjoy the rest of your day.
It's Ini.
So we'll take a quick break now. When we come back, we'll do an opening call to London. Do stay with us. It's Business Morning on Channels Television. Welcome back, and now for some developments in London. Here is Juliana from our London studios. Hello, Juliana. Good morning.
Good morning, Ini.
So the hike in gas prices has now affected about 1.5 million customers, with energy firms collapsing. What's the update? And there's still that cap on energy bills.
Absolutely. It's a major story here in the UK. In fact, it's a major story across Europe, but it's been particularly difficult for UK energy suppliers. This soaring gas prices have soared about 250% since the beginning of the year, about 70% since last month. And actually, right now, the Business Secretary, Kwasi Kwarteng, is answering an urgent question in the House of Commons because there there are so many issues. The latest, which is what you were alluding to, is that two smaller energy firms have collapsed this morning, Arvo Energy and Green. The combined total of how many customers they serve is about 850,000, and we are expecting many more. Earlier this week, the government were pretty strong in their terms. They said they will not be bailing out any UK energy suppliers, and that's because some see that the market is completely saturated. There are about 70 suppliers in the UK vying to attract as many customers as they can. And the business secretary said every single year, particularly in winter, some are priced out at the market. So they're asking people not to worry. But of course, Labour and other individuals think this is a major crisis, because even though with the way the system works, if your energy supplier drops, you will be moved into a larger supplier such as British Gas or OVO or SSE. But because they're also facing the same issue, many of them do not want to take these customers on, particularly when there is this price cap. So the conversation is ongoing. And as I said, Kwasi Kwarteng, the business secretary, currently updating ministers in the House of Commons right now.
And then we hear there's a Save Christmas letter that's been sent to the Prime Minister. Have you had a peep into that letter?
I have had a look at that letter, and unfortunately, Innie, this is not a letter about Christmas presents from a 5-year-old. This is pretty serious. This again is all linked to labour shortages, food shortages that we are starting to see on our shelves. But this is more to do with Brexit and migration rules. Now, the National Farmers Union, in fact, the head of the National Farmers Union, Minette Batters, he's written an open letter to the Prime Minister, basically saying save Christmas, but more importantly and crucially, talking about these shortages from workers. There's a shortage of haulage drivers, I believe. It's about 100,000. Lots of farmers who rely on European migrants to pick their fruit and veg. They're just not available. They haven't been given the rights to come into the UK. So what the letter is asking for is a relaxation of migrant rules and then expanding the amount of people that can come to the UK to pick food, because according to the latest data, only about 11% of those who pick food in the UK are from this country. A lot of Brits just don't want to do the job.
Well, we do hope that the Prime Minister can save Christmas, because Christmas is important to a lot of us. Thank you so much, Julian. I will talk to you later on today.
Thank you.
So let's look into the crypto market with Laddie Williams. Laddie?
Yeah, Innie, I guess we're having a green day today. Could be the Evergrande effect, because major markets in the world are recovering.
Yes,
and,
after they were able to meet up with the domestic Eurobond.
Exactly, yeah. So that's good news for markets right now. We've seen Bitcoin, Ethereum rising this morning, and a couple of altcoins too. The market cap is nearing the $2 trillion markets at $1.97 trillion. It's up 7% this morning. 24-hour volume traded in the total crypto market, $113 billion. You see Bitcoin dominance there inching downwards. It was 42% yesterday, but it's now about 41% this morning. Price of Bitcoin, $43,890. It did get as high as about $44,316 in the early trade. It's up 4% this morning. It's a good recovery. The bulls are now eyeing the other resistant levels from 45,000 to about 47,000. Hoping it's going to get there. 24-hour volume, $37.13 billion. And we have the king of the altcoins, Ethereum, now above the $3,000 mark again. It did fall below $3,000 mark yesterday. It's trading 8% up this morning. 24-hour volume traded in Ethereum, 22.32 billion. So it's about all green across board in the market. Top also market cap, we have BNB there, still below the $400 mark, but it's up 6% this morning. Cardano having that bullish move there, but we have Solana there, the biggest mover in the top also market cap. Let's bring in Solomon Amunde now, digital market analyst. Hello, Solomon.
Hello, good morning, Laddie. Good morning.
Good morning. So we're seeing an impressive recovery in the crypto market. Some are calling it the Evergrande effect. What do you think?
I feel it was actually a correction. Market has been holding strong, and we've been trying to go down below $44,000, but it's been very strong support so far, and we lost it a few days ago based on the news that came up. So I don't think it was basically because of that news. I feel it was just in the market structure.
All right, so, looking at the correction, what alts stood out for you that stayed strong? Avalanche
has been performing tremendously well for the past 4 weeks, and I see it hitting $120, $130 within the next 3 to 4 weeks. So the market is trying to hold it currently.
Hello, Solomon. Looks like the line is a bit shaky there. Can you hear me, Solomon?
Yeah, I can hear you. Can you hear me?
Okay, fine. I can hear you now. So I see $18 million was invested in Orca by Coinbase Ventures. Do you think this would, inspire other VCs to jump in?
Yeah, I think currently most of the VCs are looking into Solana. We can see MXC, they are looking into Solana. We can see AssetX, they are also looking into Solana. And I feel Solana should get massive traction. I'm actually looking at almost over $50 billion moving into the Solana ecosystem between now and the next 4 or 5 months.
All right. So, looking at this bounce right now, is it something that will continue through the week, or should we expect another pullback?
I personally am expecting another pullback to about 41,000.
41,000?
Yeah. The next few days.
Okay, and how should traders be, trading right now?
Trading right now is sideways. I'm being conservative with my longs. I've actually opened so many shorts at 46,000 and at 45,000. I have so many shorts opened. I'm looking at moving fully into 80% into leverage tokens just for the short term.
Okay. All right, Solomon. Always good to talk to you. Thank you so much.
All right.
Okay, now we see Solana there. The biggest movers up 14% this morning, $148. XRP just a cent shy of the $1 mark. It's up 7.46% this morning. We have top 5 gainers here. We have double-digit gains across board. We have Arweave there, $50 is up 30%. And we have Luna there, $33 is up 25%. Atom also doing well at $40, up 25% this morning. And NAVAX that Solomon talked about there is at $76. He's quite bullish on that one. It's up 22% this morning. And Phantom, incredible run from Phantom there, $1.25. It's recovered well at 21% up this morning. And the top 5 losers now, we have BSV there. It's down just a meager 1%. Leo and a couple of stable coins at this point. So the market is looking quite bullish right now, Ini. So it's a good play right now.
Good play. I mean, buying the dip would have paid off if you did take that action.
If you bought the dip, because when I saw that Evergrande dip in their stock, I thought it would keep going down.
But it's 17% up, yeah.
About 17% this morning.
Less than 24 hours.
In 24 hours for a traditional market, that's huge.
So I can imagine what's going on in Binance now.
Exactly, it's double-digit gains across board. Some are going up over 50%.
All right, well, we always say this is not a financial advice. It's just us reporting the market to you.
Exactly.
Well, that's it on the program today. Thank you so much for watching. Do remember to join us at 1:30 when we'll bring to you Business Incorporated, and you have updates from the world of business. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.